Hi, I'm Peiqian, and I'm NatWest Markets China economist. Over the past few weeks, the spread of the novel coronavirus has dominated headlines, and the big question on investors' mind is how will the coronavirus impact China's financial markets and the economy? I'll talk through our views on the situation, but first, let's take a quick look at the situation so far. The virus was first reported from Wuhan City, Hubei province in China on 31st of December in 2019. To prevent the virus from spreading quickly during the peak travel season in Chinese New Year, the Chinese government took unprecedented measures to lock down many cities and impose strict travel bans, leading to a sudden halt in almost all economic activities. So what impact will this have on China's financial markets and the economy? We think that three key points stand out. First, we think the impact is likely drastic but temporary. When China's financial market reopened from a longer than usual Chinese New Year holiday on 3rd of February, our China Stress Index showed a steep increase from below 105 prior to the Chinese New Year holidays to 113 currently. This is above the peak recorded during the US-China trade war in mid-2019. However, we saw encouraging signs of peaking at this level on the second day, which means market sentiment has somewhat stabilized after the first day of sell-off. Secondly, we don't need to be overly pessimistic about China's long-term growth momentum. We think it's still too early to comprehensively assess the impact as the situation is still evolving. Based on our initial estimate, China's Q1 growth might be significantly lower by at least 1 percentage point to below 5%. However, we are not overly concerned about China's longer-term growth prospects, as we expect domestic demand to recover quickly. And China's external pressure this year will also be lower, with a US-China Phase 1 trade deal being signed in mid-January. Lastly, we expect China to adjust policy priorities from controlling debt to supporting growth in 2020. The National People's Congress, which usually takes place in early March, will be the key events for markets to assess the government's priorities for 2020. This year, China is set to achieve its medium-term target of doubling its 2010 GDP by 2020, which implies an average 5.7% GDP growth for 2020. Therefore, we think China is likely to step up by introducing stronger stimulus measures to achieve this goal. That's our view, and thank you for listening.